And more importantly, what's the outlook now for the sector in 2024? Let's get a sense of all of this. Gulam Zia, Senior Executive Director at Knight Frank India. He joins us along with Saugata Bhattacharya, Independent Economist. Gentlemen, great to have you with us. Let me begin by asking you, Gulam Zia. You scan the real estate sector very closely. Now, when you see the pricing in the residential markets of the big cities, you see the way interest rates on home loans have moved up, and then you have your own understanding of the demand-supply situation at the moment. When you compare these factors with the massive run-up that we are talking about in the realty sector right now, in the markets, in the stock markets, the new heights that we've been scaling, would you say it's justified?
Well, how long will it continue should be the rather more important question. Justifiable it always will be, because on one side, when we are talking about all these factors, the other side, it's also important that the consumers are buying. And the rate of transactions has actually been moving month on month. And that's what was initially at least puzzling many of us. But then this whole transaction momentum is seen in the mid to upper end of the market, which once again answers one more question that you raised about the rate of interest on home loans. That's something which is affecting the lowermost segment of the market the most. And that segment has been shrinking. So what we have seen for almost about last 7 to 8 years, the luxury, the upper end market was actually almost as good as decimated, has made a huge comeback. And that a comeback, I would also give some number. In last 1 year, the luxury market has grown by 33%. At the same time, the lower end of the market, the affordable market, has actually shrunk, which used to be almost 2/3 of the overall market size, has come down to almost 1/3 or less. So here it is. While the lower end of the market has shrunk, the mid to upper end has done fabulously well. And mind you, most of your listed developers cater to only that segment, mid to upper end. And perhaps that also explains the rally in the stock markets as well. But overall, the question shall be, how long will it continue? Anybody's guess.
Thanks for putting it in a nutshell. Saugata, I want to take what Gulam Zia is saying by way of the shrinkage at the lower end of the market when it comes to the real estate sector and what we are seeing as a comeback in the luxury segment. Is that getting reflected in the kind of contribution that the real estate sector is making to the GDP and the contribution of home loans in credit growth of our banks and NBFCs as well?
Thank you, Vikram, for having me on your show. Big privilege. So I completely agree with Mr. Zia on this, that it is the upper end of the market, which is contributing to the residential home loan segment. And this is not just in the metros. I mean, Mr. Zia will probably reinforce this. This is being seen across tier 2, tier 3 cities as well. I mean, the upper end of the market segments, even in these smaller cities. I think one part, I mean, that it is really what has brought about this boom. So in the residential sector, in the commercial real estate, which is also booming equally as in the real estate segment, and the listed developers are very active in the commercial real estate segment. So one part from the residential segment that I can think of is a correlation between in the wealth effect from the equity markets, stock markets, into the perceived wealth effect and thereby into a demand for residential housing. From the commercial real estate segment, I think there are two factors that are working. One is the increasing entry of these global capability centers, the call centers, BPOs, front offices, mid offices, etc., and the rising part of a lot of the domestic demand that is also coming in terms. So I think the combination of the high-end residential segment coming in from both the wealth effect as well as a perceived need for housing, as well as the increasing use of the increasing phenomenon of return to offices from the IT segment. I think everything is coming together to bolster the two segments of the real estate market.
Gulam Zia, as far as the wealth that is getting created in the equity markets, Saugata Bhattacharya believes that is what is getting piped into the real estate sector. When you look at where the demand actually is, where there is an uptake, does that add up, especially in the residential market? And tell us about how the commercial part of it is also panning out right now.
Sure. So to start with, I would slightly disagree that it's only the wealth created on the stock exchanges of late. I would say you have to go much longer in past to look at the phenomenon of a sudden upsurge of the sales. Number one is, before COVID, when the economy was doing well, even stock exchanges were doing fabulously well in 2017, 18, 19, but residential sales were truncating year after year. It actually came down to the lowest just about COVID year, 2020, 21. After 21, it started bouncing back. So one point that also needs to be kept in mind is that those were the days when wealth creation was happening, when job growth was happening, everything was looking good, economy was looking good, but people are not buying houses. So over and above the bounce back in the stock exchange of late, you have to also look at the pent-up demand of those years, at least 6-7 years. People were holding back their wealth, either putting up in stock exchanges or somewhere else, and making it grow. And that money is today available. And that's something which is coming into residential market. That's one part. The second you asked me to talk about is the commercial real estate. I think we already heard about it, that global capability centers are essentially the reason behind it. But the shift, what used to happen in India was essentially driven by IT, ITS, BPO, etc. At that time, which was pretty much the lower end of it. It started with call centers. But over a period of time, it has actually grown much higher. So today's your capabilities, your capacities, your resources are of much higher an end. And that's where actually most of the financial sector, the big banks and many of the global companies are looking at doing insourcing. So insourcing is the mantra, and global capability centers of much higher order of research is what is happening. And these are the people, that the resources that you are recruiting today for upper end of the requirement require much better facilities, much bigger offices and so on. And that is also reflecting in the way the office market bounce back is happening. Believe me, what has happened, at least in this year, it has actually almost come back to the same kind of volume that we saw just before COVID, almost 60 million square feet of fresh office stock absorption that we observed in 2023 as well. And looking forward, it is growing. So overall, whatever we have seen earlier, we are going to see the historic best in 2024, even in office market, the way things are going. So overall, as he said, we have every sector doing very well. Of course, we are not talking about retail, warehousing, or hospitality, etc. Pretty much every sector is doing fabulously well, and that perhaps is reflecting in the overall health of the real estate market today.
Outlook as strong right now, Saugata. We have been speaking to several market experts, and that's not really the question about the markets, but I'm generally saying that the mood is very positive about economic growth in the country at this point in time. And the RBI, of course, it's still pitching that battle against inflation. When it actually cuts down those interest rates, do you think that momentum is also going to push the lower end of the real estate market? How is all of what is happening getting reflected in our GDP right now? Is it adding up over there for you?
It is, actually. Let me break it down into a few parts. One, this demand for high-end real estate, this is not just a phenomenon in India, in the large metro cities and the other cities. City after city across the world, be it London, Sydney, San Francisco, New York, etc., property prices are booming. I mean, it's becoming more and more unaffordable for many people. So this is a phenomenon that you're now seeing across the world. The second part is, again, in one part that is contributing to the current demand is the growth in home loans that you're seeing. Of course, from the higher end of the market, I mean, the higher interest rates probably do not matter that much, which is a good explanation for the sluggish demand in the lower end of the housing markets. But the middle and the upper end of the markets, particularly the upper end, are more or less are willing to absorb the higher interest rates. So the home loans that are being sought from banks is also another factor that is driving in demand for the higher end loans. So that's another one. I think your basic question, that is this part of the GDP growth, very much. I think I completely agree with Mr. Zia on the pent-up demand, but I think that pent-up demand, one part of the pent-up demand is the rising confidence, which is one thing which is now characterizing consumer sentiment, investor sentiment, which was probably not there as much in the pre-COVID years. So this increased confidence, and remember, confidence is a very large factor of the wealth effect that we are seeing. So the rising confidence that we are seeing amongst a large part of the investor base, the consumer base, is another driving factor, another contributing factor to the higher demand for premium housing.
Yes.
And this confidence is coming in essentially from the prospects of growth that you are seeing.
Correct.
You said that, I mean, corporate profits, corporate financial results are likely to grow by in the higher tens. So that is something which we're reflecting.
So the confidence is high,
RBI
you
has
say.
forecast 6% GDP growth
Yes.
for next year, which is very high.
That's true. So if that confidence remains high, by way of real estate as an investment, as an asset class, Gulam Zia, we talk about the pickup in equity investments, and that's been happening very consistently. Also, people park money into buying their first homes. That's a given. But when you talk about real estate as an investment class, very quickly, especially for Indians living abroad, how is that part really growing? You said when luxury real estate grows, that's the part that is most active, isn't it? The outlook for growth, is it going to be led by this class?
Not really. I don't believe that would be the main reason. I would want to believe that it's the Indian people like you and I who will be buying. Because please understand, even now, and I don't want to believe for next year or two, you will have an investors market in buying homes. Because your rate of growth, the price growth is barely about 5.5 to 6%, barring a few exceptions where the superlative developers, superlative projects, locations are getting about double-digit growth, and that too not every year after year. So on an average, your growth rate of or price growth is barely 5.5 to 6%, but just does not justify investing in housing, buying a house as an investment option, especially because of the liquidity concerns that we always have with real estate. And the second part of that question, the same thing that you asked about NRIs or people globally who want to buy in India. Well, let's not forget the currency devaluation has always been discouraging for last at least about 8 to 10 years. I haven't seen any NRI making any money by investing in Indian real estate. And that is what is the key concern. If you're buying a house, buy it for your self-consumption. As an investment, you should keep away from buying a house. At least, of course, equities, REITs, etc. are multiple options available. But buying a house for yourself should be the last of your option.
An investment, but definitely if it's a home for yourself, for you to live in, then definitely make that choice is what Gulam Zia is indicating. And the confidence level that Saugata is talking about, that's attracting a lot of people to real estate stocks. That's something that we are seeing for sure. Saugata Bhattacharya and Gulam Zia, thank you so much for joining us with your very interesting perspectives on the real estate sector. Appreciate you joining us tonight.